Hello everybody. Thanks for taking the time to watch this video. My name is Michelle and today we are going to explain investing with Selma in a little more detail. Basically, we will discuss 4 topics today. In the first part, we will introduce you to Selma as a company. Part 2 is about our individual investment plan with Selma. Part 3 will cover everything that happens after you open your account, so how Selma manages your money. And finally, we talk about the price. How much does Selma cost? I'm not alone here today, so I have 2 experts by my side, Daniel and Thomas. Welcome, and can you quickly introduce yourself?
Thank you, Michelle. Yes, I'm Daniel Trum, the investment manager at Selma. I have joined Selma almost a year ago, and I bring with me more than 10 years of investment experience from the world of major banks in Switzerland.
Yeah, and hi everyone, my name is Thomas. I'm working at Selma as a customer success manager. I've been with Selma for now 3 years already, and I've been working in the financial industry and investing community for more than 25 years. So I'm passionate about long-term investing and about the benefits of investing regularly.
Perfect. Then I'd say straight into part 1, get to know Selma. So Selma's big goal is to help everyone do the right thing with their money. It is unfortunately still pretty common in Switzerland and as well in many other countries that people do not invest their money at all, or they invest their money in a way that does not suit them. Each of us has a different background and a different financial situation. And this is exactly where we want to help with Selma, so that everyone can invest their money the way they should. So Selma looks at your overall financial picture, takes into your account your entire financial situation. We create a personalized investment and or Pillar 3A plan for you. We give you personal advice and we manage your investments automatically. Then let's move on to our team. Thomas, I give the word to you.
Yes, so of course there is Selma, your digital assistant, but behind Selma there is a big team of finance professionals, IT professionals, marketing professionals. All together in February 2023, we are already more than 30 employees working day and night for Selma. Selma was founded in 2016. The founders are still working within the company. We have already 12,000 customers, and this is growing on a daily basis. So thank you everyone for your interest, and thanks to all the customers that are already with Selma. You can look us up, of course, also on the internet, www.selma.com, and you will also find us on Google with more than 300 reviews. We have a highly rated service on Google also. That's, of course, which we are, of course, very thankful to. You might ask yourself the question, who is behind Selma? As I said, as an investor, there are still the founders, and we have also 2 larger outside investors, companies you might know of. One is Sparrow Group, part of the Migros Bank, and the other one is TX as part of the media conglomerate in Switzerland. So both very well-known brands in Switzerland, and of course we are very happy, and for us it's also a big leap of confidence that such big and trustworthy partners are also part of the Selma journey.
Perfect. Thank you, Thomas. Now we know about the team and who is behind Selma, and now tell us a little bit about how Selma works.
Exactly. So when you go to your Selma user pages, you will find that Selma is asking you a couple of questions in order to understand your financial situation and your financial background. So what Selma looks at is your financial situation. Selma will ask you questions about your willingness towards risks. They will also ask about investment horizon, And of course, the personal values are also important. For example, whether you would like to invest in a sustainable way. All this is important for setting up your investor profile. And then here you can see, once you have your investor profile, this is basically the cornerstone of your investments. Once you have set up your profile, you will get an overview, of course, of your financial situation. Selma will analyze the optimal way how to split your investments. Of course, you will learn later in this webinar more about it. And you can, of course, also update your profile anytime. This is also very important, as this is the cornerstone. Whenever there are some significant changes in your, be it financial situation or in your willingness towards risk, you can, of course, at any time update your profile, and then Selma will also look whether your investments should be adjusted or not. What you will also see is that Selma creates your investment plan. With plan, we mean your individually drafted plan based on your financial situation. You will also find that Selma is doing your investments with ETFs for global and very broad diversification. And of course, as you know, also Pillar 3A for your retirement can be part of your overall usage at Selma. If you want to, of course, you can also open up a Pillar 3A account. And the rest of this webinar, however, will focus more on the investment account side of your Selma services.
So before we move on to our core product, the investment plan, let's take a quick look at our third pillar product. Thomas, you have already mentioned our offer. Can you tell us a bit more about it?
Sure. So as said, you can also open a Pillar 3A at Selma. Of course, with a Pillar 3A, you have an immediate benefit from the tax advantage when using a Pillar 3A account. For Pillar 3A, we work together with a very established partner in Switzerland called Vermögenszentrum WZ. Altogether, you can choose from 6 different investment strategies. Again, with the usage of ETFs, your money will be invested according to the strategy that you have chosen. Selma provides you a great way to combine both a regular investment account and a Pillar 3A account. And the advantage for you is also that when you reach certain levels of your total investments of Selma, you might also benefit from reduced fees. And of course, you will see an individual, transparent and inexpensive way of investing within a Pillar 3A account.
Great. So then let's go directly into our core topic of the video, investing. So what does investing mean, Thomas?
That's a very good question. Very often there is not a wide understanding what does exactly investing mean, and people try to confuse investing and speculating. So maybe let's have a couple of words about what do those terms actually mean. At Selma, it's all about investing, and it's not about speculating. With speculating, we mean, you know, this famous advertisement that you see on TV, get rich fast, get rich overnight, and you will end up somewhere on an island in the Caribbean. This is only happening in the advertisements. This is not happening in real life. Speculate would mean that you would short-term buy and sell mostly very risky assets where you might even have a potential of total loss, so of losing all your money. This is not something that Selma is engaging in. With Selma, we talk about investing. And investing means that you let your money work for you over time. You pursue a long-term goal to achieve gains with an acceptable level of risk, and a level of risk that fits your profile. This is what is investing about, and this is where Selma can help you in a very optimal manner.
Great. So you already said that long-term investing is what we do at Selma and what is our approach. We will separate this into 2 parts. The first one is the in what should you invest, and the second one, the how should you invest over time. And we will start with in what should you invest? And for this, I hand over to you, Daniel. So how or in what should we invest?
Thank you very much, Michelle. Let's look at this slide first. So in what should you invest? This is a question that cannot be quickly answered, so we should spend a bit more time here on this slide. First of all, it's very important that the investment mix fits to your investor profile. So, for instance, it doesn't make sense to invest with a lot of risk if your financial situation actually doesn't allow for this. On the other hand, it also doesn't make sense to invest with too little risk if actually you have a very strong financial situation and you could handle investments that can swing up and down more heavily. So this is exactly what Selma is watching out for, is taking care of, as we have shown before, by analyzing your situation, your background, in terms of risk willingness, risk ability, financial situation, and then creating an investment portfolio that hopefully perfectly fits your individual situation. Secondly, it's, as Thomas, I think, already mentioned before, it's in investing not about speculating, about major gains while also having risk of a total loss. It's more about the steady long-term gains. And for that, it's important to spread your investments. Or in financial lingo, you would say diversification. Spreading your investments, like grandma always said, don't put all your eggs in one basket. This is very important and helps you to balance out the different risks of the various parts of your investment portfolio. At Selma, your investments are spread very broadly, but still also inexpensively thanks to using ETFs, which is short for exchange traded funds. And through them, you get access to hundreds, if not thousands of companies globally, which are listed on the stock markets. And you also actually get access to gold and silver through ETFs at Selma, which are added for some protection to your portfolio against certain risks. Third and last, very important also, Selma is completely independent when selecting these ETF products. We are not a bank, so we are not trying to sell our own investment solutions. We are free to choose those ETFs which we think offer the best characteristics in terms of diversification, transparency, low cost, safety. That leaves us then with the question, how should that investment portfolio actually in a concrete way look like? And that is something we will see on the next slide. Here we are looking at an example portfolio. As we mentioned before, we invest into ETFs, so we do not invest into single company shares. The ETFs rather are a collection of many, many companies. And this makes it, as I've said before, an inexpensive, transparent, and easily tradable way to get an indirect access to a huge number of companies. As you can see on the left side, there are international companies. In these portfolios, there are Swiss companies, and there are also ETFs for other kinds of investment products used here. In general, these ETFs at Selma fall into two categories. There is the growth category and there is the stability category. Finally, some precious metals are added for protection against certain market risks. We will talk a bit about this in a moment. But back to growth and stability. So how is this put together for your portfolio? There is the Selma algorithm, which takes care of this and decides how these two parts, growth and stability, are ideally mixed together to create your personalized portfolio. And this decision is based on the input you provided to Selma regarding your risk ability, risk willingness, and your financial background. So this way, Selma can give you a fully tailored individual portfolio by mixing these growth and stability parts as you need it personally. If you can take a lot of risk, the algorithm can also create a portfolio for you without any loans, for instance, or in financial lingo also known as bonds. So with a pure focus on company shares. And what the algorithm can also do is to recommend you a portfolio without any real estate ETFs in there if, for instance, you provided the information that you own already privately some real estate, and then this could be removed to avoid a risk of having too much concentrated investments in the real estate space, which would put too much risk into one sector of investments. I should note, highlight here that the illustrated weights you can see on the left side are just the strategic target weights, as we call it. So there can be temporary deviations from them. The algorithm takes care of that, decides about these tactical deviations. So there is no agony of choice that you as a client have to go through, having to decide how much to weight the international companies part, for instance, from month to month. This is done by the algorithm in the background. Also, as I mentioned before, precious metals are part of this. They are added basically on top after the growth and stability part are put together. That is namely gold and silver here in this case, for protection against market risk, like market corrections like we saw in early 2022, or inflation risks. We will talk a bit about the dynamic adjustment here on this part in a moment, because this part can actually range from 5 to 25% of your portfolio. And lastly, I should mention on the next slide, we also have, of course, a sustainability option available. So you can switch on in your investor profile your preference for sustainability investments. In that case, you will get the same investment approach as I have just highlighted, with exactly the same basic features, with growth, with stability, with additional precious metals against certain market risks. However, the difference will be that all the ETFs in your sustainable portfolio will be different. They will all be basically sustainable versions of the ETFs we would use in a standard portfolio. The approach we use here is the best-in-class ESG standard, which is a standard that starts with excluding certain companies that are active in industries like tobacco, weapons, manufacturing, or gambling. And then on top of that exclusion approach, the remaining companies in that product are scored for the degree of sustainability they show, and accordingly the portfolio is weighted more heavily towards the company with a better sustainability scores. So to make it short, your investments will still be widely spread through these ETFs, but they will include fewer companies due to these exclusionary measures. With that, back to you, Michelle.
Perfect. Thank you, Daniel. So now we have heard what Selma invests in. So we have this second part still ahead of us, how to invest. So Thomas, your turn.
Exactly. So if Daniel just told you, as Michelle said, about what is the best portfolio that fits to your investor profile, the second question, of course, you might ask yourself is, well, now that I know in what I should invest, how should I then build my investments over time? And this is, of course, also a very important question, but Selma can help you to find a solution to. So Selma creates an optimal strategy that shows you how to build your investments over time. First of all, it's very important whenever you invest that you think long term. money is invested so that it starts to work for you. And actually, the longer money can remain invested, the better for you. What do we mean by long term? With long term, we mean you should only invest money that you think can remain invested at least for the next 3 to 10 years, ideally even longer than 10 years. Of course, your investments at Selma, they are always fully at your disposal, but again, think and invest long term. And then, of course, markets can go up and down short term. As we have seen during 2022, sometimes those differences within the year can actually be quite large. So it does also make sense not to invest all your money at once, but invest step by step. And if you have a monthly savings rate, if you can put money aside on a monthly basis, you can also use part of that money to continue to invest regularly. So basically what Selma helps you here is to come up with a plan, then you can stick to your plan, and even when markets are struggling, it's important to stick to such a plan. Because whenever there are turbulences in the market, then of course, when you keep on investing, this helps you to benefit even from such fluctuations. All this is illustrated here on the left side. Here on the left side in the chart, we try to illustrate how regular investments can help you to achieve a better investment return. So when you look at this example, you will see 3 different approaches, all of them with a total investment sum of 56,000 Swiss francs over 9 years. In the 3 columns, you see 3 different ways to do that, all of them starting with 2,000 Swiss francs. And then in the first column, you would invest every 3 years 18,000 Swiss francs, or as in the second column, every year you would invest once 6,000 Swiss francs, or then in the third column, you would invest every month 500 Swiss francs, 12 times a year over 9 years. So as I said, the total investment sum for all the 3 different options would be 56,000. However, as you can see from the numbers, the outcome is very different. The one with the most gains is the one where you invested regularly. So you invested monthly. And how can you explain that? So what is the reason for that? Well, basically, what you are able to do when you invest regularly, you continue to invest even when markets go down. As you know, markets can go up, but they can also go down. And then whenever they are down, you can buy cheaper. And when you buy cheaper, of course, with this, you can benefit when markets recover again and increase your returns. And when you invest regularly, it also means that you can put your money to work for you at an earlier stage. You don't have to keep it on your cash on your bank account and then invest with a larger sum, but you can continue with smaller sums so money works for you at an earlier stage. So here you can clearly see that regular investing benefits you as an investor. And of course, Selma is exactly built for that. So we very much support regular investing. You're fully flexible how often and how much you would like to deposit into your investment account. And most of our clients actually are using Selma for regular investing.
Perfect. So now we've heard how Selma helps you create an investment plan. So in which products you should invest and how you should build up your money over time. So we now come to the last part. So what happens after you open an account with Selma and how your investments are managed over time. Let's start with the online account opening. And so before Selma can manage your investments, you need, of course, to open an account. So with us, this is a simple and completely digital process. So all you need is your ID and your smartphone. After identification, you will receive your account number from our partner bank, Saxo Bank Switzerland, within 2 hours. You are fully flexible regarding deposits and withdrawals, so you can withdraw your money at any time, and you don't have a minimum timeline how long you need your money to sit on our account. You can withdraw it whenever you need it. And once you've made your first deposit, Selma takes care of your money. and the work starts for Selma. And that's the next part. So how exactly does Selma's work look like after the account has been opened? Daniel.
Yeah, exactly. Thanks, Michelle. That's also a very important point. Let's quickly talk about then how the investment strategy is managed and maintained over time. One important thing is that the investor profile should be updated every time there is a change occurring, a major change occurring in your financial background, in your life, which could have an impact on the way you should or can invest. That is a very important part of a good management of your investments, that you keep your investor profile up to date. It doesn't have to mean that you do it every week, but just when something big changes, please update the profile, and then the magic of the algorithm can start, that it can calculate within seconds actually if your investor plan should be changed, and it will present you within seconds a new plan that would fit the information you have just entered. And you can then decide to either accept the changes or not and seek further advice from Thomas or other colleagues in the chat or on the phone. Selma then over time, also if you just leave it working and don't provide new information, over time Selma still regularly checks your portfolio and makes sure that it fits to your plan, which means that, for instance, rebalancing has to happen actually, to keep the differently developing part of your portfolio close to the target weights that you have set at the beginning once you set up your plan and agreed to it. At the same time, however, Selma also takes care that there is only so much trading going on in your portfolio as is necessary to keep your portfolio on track for your long-term plan. Your portfolio is monitored and checked daily by the algorithm, and therefore the changes can be implemented very fast and also very cost efficient, thanks to the algorithm calculating how much trades are actually needed to keep your portfolio close to your plan strategy. By the way, the trading costs are actually already included in the Selma fee. You don't have to pay any additional costs for trading. Additional costs, however, can still be caused by things like stamp duty tax in Switzerland, or foreign exchange fees for the parts of your portfolio which are invested in other currencies than in Swiss franc. And then I should add on the next slide an interesting additional feature that Selma offers, the adjustments to the financial markets. This is something I think that clearly sets us apart from the competition. We have at Selma the ability to calculate how expensive the various markets across the globe are. So these are the so-called over and under valuations. We use the so-called Shiller-Cape ratio to calculate this. This happens regularly every quarter. And the investments which are deemed to be more expensively valued, so where you basically pay a rather high price for getting access to the underlying company earnings and dividends, these would be weighted a bit lower than usual, and vice versa. The cheaper investments would be weighted a bit more strongly in your portfolio than the long-term strategic target weight. Another adjustment possibility arises from the fact that with the precious metals feature at Selma, we can also actually dynamically shift a larger part of your portfolio out of company shares, not completely out of them, but what it means is that if all the markets for company shares, the US market, the European market, the emerging markets, if they are all at the same time rather expensive, this can obviously also happen, like in late 2021, that after a long and strong rally of the markets, everything looks expensive. At that moment, the dynamic precious metals feature decides to shift weights from all the company share parts of your portfolio, not just one, but from all of them, out and put this into precious metal. And therefore provides your portfolio with a certain protection against the risk then that all the company share markets at the same time could correct, which actually then happened in early 2022, as you probably know. As an example, in early 2022, in some portfolios at Selma, I think the precious metal part reached around 20% weight of the portfolio, so quite a bit higher than the 5% minimum weight they have. And I think this helped quite a bit during the market correction to cushion this negative effect from the downturn of the company shares markets. This is a feature which is usually not available at Robo-Advisors. Then also important to note is that we at Selma always have a combination of human and machine. It's not only the algorithm doing all this work. We have a proper investment management which keeps an eye on the algorithm and double checks all these processes that they all make sense, that the output from these processes are valid and can be implemented in the client portfolios. I think to summarize, as we can see, all these adjustments we have now talked about, they take a lot of effort to calculate and to execute. If you try to do this yourself, you would have to constantly monitor the markets to have all the information at hand. And therefore, I think it is actually much easier to leave this to Selma and its algorithm to do the hard work in this.
So good word. You said it's easier to let Selma do the work. So how do we work differently in comparison to other providers?
Yeah, on the next slide, we see, I think, a good comparison summary of Selma versus other kinds of solutions. Starting with the traditional bank approach, going to the Robo-Advisor, and then for the more wealthy people, the private banker. And I think we should not go through all the details here. It's quite a lot of information. You can read through this later with more time. But what I would like to focus on here is that Selma is an individual tailored solution. It is individual for every client. It's not like offering just some off-the-shelf solutions, which you would often get, I think, with robo-advisors. And at the same time, we can offer a lot of features on the management side of the portfolios, as you can see here, ticking a lot of boxes on the investment management side, which is also a key difference, I think, to other solutions in the market, and makes us a bit more comparable, I think, to solutions you would otherwise get from a private banker. So therefore, I would summarize this as Selma combines the simplicity and low costs of a robo-advisor approach with the services that you would get from a private banker. Or even simpler, in even simpler words, the robo-advisor replaces the bank, and Selma aims to replace the private banker.
Great. So now we've learned more about Selma in the first part, looked at the individual investment plan in detail in the second part. The third part was about what happens after you open your account, how Selma invests your money. And the fourth part and last part is about the costs. So the financial industry is unfortunately not very transparent when it comes to costs. How does it look like with Selma? How much does Selma cost, Thomas?
Well, as Michelle already said, the financial industry is not famous for being very transparent. We at Selma want to be very, very transparent when it comes to costs. It's your money, so you should know what you pay your fees for. We have a very transparent fee structure at Selma. As you can see here, in case you start with investments and the value of the investments is less than 50,000, then the fee would be 0.68%. And in this, mostly everything is included that has to do with your investments. So all trading fees and bank charges. So there is a safe bank account. You can deposit, you can withdraw at any time. You get the Swiss tax statement, Pillar 3A, deposit confirmation. As we have featured out, you get your individual investment plan, your recommended Pillar 3A plan, all these automatic adjustments that Selma is doing on your behalf in order to support you in your investments in an optimal way. All this is concluded in the Selma fee. There are no extra charges. As Selma is using ETFs, so in order to be fully transparent here, those ETFs, they have product costs. And the product costs, they are 0.22% on top of the Selma fee. And whenever there are transactions, there might be stamp duties, product costs, as we said, and maybe also even foreign exchange duties. But otherwise, most of the fee is the 0.68%. Should the total value of your investments, and here we look both at the investment account and the Pillar 3A account, if you have both accounts at Selma. So should the total value of your investments be more than 50,000, then the Selma fee is reduced to 0.55%, and it gets even reduced more to 0.47% should the value of your investments reach 150,000. And what does this mean in numbers? Maybe Michelle on the next slide. Yes, so here we have an example for you. In case the value of your investments at Selma is 10,000 Swiss francs, then you would see that the Selma fee with 0.68% would be about 5.67 Swiss francs a month. The product costs another 1.83 Swiss francs a month. So it would be about 7.5 Swiss francs a month for investing 10,000 with Selma. And in the next slide, you can see what would have happened if you increase your investments then. So you would then benefit from the lower Selma fees percentage at 0.55%. Again, the Selma fee, the product costs, in total it would be about 32 Swiss francs a month, and you would actually save, of course, because now you would benefit from the lower Selma fee structure.
Perfect. So we have two financial experts by our side today. So I would say let's take advantage of that and get some more tips directly from you both. So Daniel and Thomas, I hand over again to you.
Thank you, Michelle. Well, first and foremost, I think it's always important to remember that you should not wait for the perfect moment to start. Whenever we talk about long-term investing, and here we definitely mean to invest long-term, there is always a good time to start, and do not wait for the perfect moment.
Exactly, and you should stay loyal to your plan. Once you've found a investment plan strategy that fits your life situation, your needs, stick to it.
And then emotions are always a bad advisor when it comes to investing. We all know that markets can go up, they can also go down. And it's not nice to see that investments or markets might go down. Nobody likes that kind of feeling. And as I've been 25 years in the investment in financial life, markets can go down, but eventually they also go up again. So don't panic, don't get distracted by emotion, stick to your plan, and try to be non-emotional when it comes to investing.
Exactly. Avoid the emotions. And that also means try to think long-term, because in investing, time is on your side. The longer you invest, the more likely it is you're going to benefit from good investment returns.
And another very important topic when investing money is that you should invest very broadly diversified. So what that means is exactly what your grandmother told you, not to put all your eggs into one basket, because eventually they might break if the basket falls down. But spread your risk and invest broadly diversified. With the help of ETFs, Selma definitely follows this approach, and it helps you to better balance risks when it comes to investing without having to compromise on future return. So keep investing in a diversified way.
Great. So thank you very much for your attention and for staying until the end. We hope that this has answered your last unanswered questions. And of course, if not, please contact us via chat or write us an email. And in the same spirit, many thanks to Thomas and Daniel. It was fun as always, and I enjoyed our time.
Thank you very much.
Thank you very much. See you at Selma.